Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Tuesday the 10th of September 2013. Well, it's been an interesting start to the week, and the reason why, of course, is that we're coming off the back of that payrolls data. Now, that payrolls number was slightly weaker than expected. It came in at 169,000. That probably is enough for the Fed to start tapering, but it's the size of the tapering that the market is a bit concerned about. It certainly suggests that maybe Fed monetary conditions will remain accommodative for some time, and that's helped stocks to rally. Stocks were up on Monday in the US, and that's filtered through to the European stocks this morning as well. Now, what we've also seen is the dollar. Now, the dollar has been quite mixed. It did obviously fall on the back of these payrolls, but the downside has been cushioned at the 200-day moving average at 81.70, and it's really starting to gain some is very, very closely linked to changes in monetary policy. So what we've seen today is that the dollar yen has broken back above 100. Now, interestingly enough, that's not because of what's been going on in the US, more like what's been going on in Japan. Japan is having its own political debate right now about a consumption tax. So the Prime Minister said that if they're going to do a consumption tax, which could impact the economy, what they'll also do potentially is have an economic stimulus package. Now, stimulus, that's considered negative, more money in the economy, and that really helped us push back above 100. So in the lead up to next week's all-important Fed meeting on the 18th of September, we have 100.85 and then 101.40. They're the highs from the start of July. They are the key resistance levels on the upside, with 99.50 then 99.20 on the downside. But we are trading with a bit of a bullish bias. Now, we also got a raft of Chinese data out this morning, industrial and retail sales. And you know what? It was good news. It's just that the Chinese economic recovery has really started to get a bit more broad-based, and we may have seen a bottom for Chinese data. Now, when you talk about Chinese data, you've got to look at Aussie. Let's take a look at that. As you can see, Aussie has made a really nice low there, just below 89, and since then it's really managed to gather strength over the last week. It's pushed above some key levels, and it's now very close to 93. Now, that's a significant level. Etch that in your minds, because 93.20 is the top of the daily Ichimoku cloud. Now, obviously, anything above the cloud is considered an uptrend. If we manage to keep this positive tone, then we could get above there. That would open the way to 94.15 in the near term. That is the 100-day moving average. So the momentum seems to be on the upside, certainly from a fundamental perspective in the Aussie, what with that better news out of China. Remember, China is one of the pillars of Australian growth. So if that's strong, that should be good news for the Aussie dollar. But also from a technical perspective, especially if we can get a daily close above 93.20, the top of that daily cloud, that would be a very bullish development for the Aussie. And that's one of our ones to watch, actually, the Aussie, and a potential strengthening and recovery over the next few months. So one to watch for Q4. Okay, everyone, thanks for joining, and see you again next time. Bye-bye.